Hey guys, it's Gale, the Gale team, Nova Home Loans. I'm here again with Derick Vogel, Credit Absolute. Thanks again, brother.
Absolutely, thank you, Greg. Appreciate it.
So we were talking the other day. I actually taught classes on this. These little pie charts that have like 35% for history, or 15% for this or that. Can you really dive into this and tell people what the true meaning is and what that really means to them and their score?
Of course, absolutely. It's a great question, and I think it's very critical. Our credit score is based off of 550 points. And so if you're familiar with the word FICO, it's what financial institutions use to show you your credit score and your credibility to be able to get a loan. And so the bottom score is 300, but your highest is 850. And so our goal is, of course, to strive for perfection.
So that's where that 550 comes in. That's the median between the two numbers.
Yes, okay. That's correct. And so when we look at the pie chart, what's critical is that the two biggest pieces of the pie are 35% payment history, but then 30% is credit card utilization. And why those are two important is because everything else behind it follows. And so you got 15% is the proper mix of credit. And then you got 10% that is going to be new credit. And then you have length of credit would be the last percentage of the small piece of pie. And so the really cool thing, though, is as long as you focus on the two big pieces, you will be able to maximize your scores. And that's where I was able to explaining that I can help people increase their scores from 40 points to 100 points in 30 to 90 days.
Dude, that's a great way. Wait. Say that again.
40 points up to 100 points in 30 to 90 days. I call it the straight line education.
Wow. So after you pull someone's report, you take through it and you look at that credit utilization, and then you have software that kind of back into the algorithm to figure out what they need to do.
Well, I worked in the scoring algorithm software company for in credit for about 3+ years.
Okay.
And so just from my own experience and living it and experience what works and what doesn't work. But when you have 35% of your credit score is based on payment history, and that includes mortgages, installment loans, credit cards is a majority of it.
Got it. Okay.
Because 30%, remember, of our score is credit card utilization, not installment loans, not personal loans. And so there's 3 types of credit cards, which is extremely important to trigger the scoring algorithm. You got a major credit card, which is like American Express, Discover, regular credit card, Capital One, and then your department store, Home Depot, Kohl's, and they are looking for all 3 credit cards.
Okay. And so if I'm missing one, I don't have a healthy mix.
Absolutely. Okay. And then once you get it, they're going to say, okay, you can manage all 3 types of cards, but now can you manage the utilization ratio? And so what's really important is FICO did studies that anything a client had that had a 780 credit score and above, they'd maintain a 7% utilization ratio. And I hear all the time, as long as you're at 30%, you're okay.
No, that's 30% of the balance of like one card. Not all of them as a mix, right?
Well, actually both. And so what I mean by that is I've done tons of reviews where I've seen credit cards where you paid to all of them down to 30%. You get a little bit of an increase. But if you're able to focus on the one specific card and bring it down below 10%, now you're maximizing the algorithm.
Okay. And
so when I get into the coaching in the straight line, I'm like, look, all you have to do is follow these simple guidelines and your scores will increase. It's impossible for them not to. And so with that being said, that's where I spend a lot of time on the credit card utilization.
Nice. Well, what I like about that, and thanks again, man, that's great knowledge, is that it's that I have someone in my corner that tells me exactly what to do with my money. So I'm not paying, $5,000 to get where I think I need to be. I can maybe cut it down to where it's like $2,000 to the specific spot, and maybe even get more points than I would have spending more money.
Absolutely.
Right?
Yeah.
That's solid. All right, guys. Hey, thanks again for tuning in. Thank you, Derick, for your time.
Absolutely. Thank you, Greg.
All our contact information is below. Thanks, guys.
Take care.